Hey everybody, this is a different type of video because I'm kind of sheltering here with my little girl against the rain outside, and I'm away from the keyboard, but I want to talk about a couple of things, right Kelly? Yeah, we want to talk about what's going on in the macro environment. Today or in the next couple of days, we will see the Fed possibly starting to cut interest rates. So that's a big thing. And also I want to talk about tariffs. So these are geopolitical things and macro environments that have influenced Chinese stocks by a lot. And I think there is quite a chance that we might see a different stance going forward. So if the Fed is going to cut, I believe this will also unlock the possibility for the Chinese government to bring more stimulus and also dollar investments to flow back into Chinese assets. So this would be one thing for looking out, because why is the Fed cutting? Possibly because unemployment rates are going up, because the environment has been very restrictive for a very long time. Inflation seems to be cooling, and maybe in the future we might see a little less bullish US economy data, and also maybe with that earnings with the companies. We'll see about that. So this is when they need China, and China will possibly start to stimulate its economy a bit bigger than we've seen. We've seen some mini steps, right? Like rate cuts, whatever, bank cuts, these type of stuff that we have seen in the last couple of weeks after, for example, the third plenum. And I think there will be a little bit more coming, not only the policies that we've already heard about, like the bringing down the retirement age of people in China, which is a way to fight a demographics problem, but also have a bigger workforce in the future, and having people frankly earning more money, but also some policies that we've seen helping for real estate and so on. And that's for one. With now the Fed starting to cut, it's a big change that I see coming, and maybe once those things are in place, we will also see the reporting about China changing a little bit, and maybe, Kali, what you say, maybe it's becoming a bit more bullish in the future, because what I think was a main problem in the past was obviously we had a pandemic, people were not traveling to China anymore. China did have a downturn in terms of economic activity, parts of that due to global demand, but parts of that to some internal steps that I have taken. And now China's open back again, and they're trying to set the right messages and tones going forward. And one of that is about tariffs. So today we had the German economic minister meeting its counterpart in Berlin. They've been talking EV tariffs, and it's interesting that a German economic minister, who is kind of a China hawk, I must say, he's from the Greens, and the Green Party is pretty much on this US agenda currently when it comes to all of those geopolitical matters and so on. But he mentioned we actually don't want tariffs, and I think that's largely the position of Germany because of the big automotive industry. I think we've seen German OEM CEOs talking about that, right? And now we having a kind of an alliance forming between Spain, Portugal, maybe Italy in the future, and Germany, who are kind of Norway, I think as well, kind of starting to lobby against the EU tariffs hikes that we've seen on something that is actually helping the green transition, right, for EVs. So maybe now somebody who's actually hawkish on China talking like that about the matter of tariffs, that we need to find a political solution, and that we shouldn't actually engage in such a trade war. That's a sign of something else, I believe. I think it's a sign of what we might see unfold in the next coming months and years, which is that possibly we see a larger deal-making approach. I have to catch my daughter here. with China again, because you have to be pragmatic once the economy is turning down, and largely because we are finding that the interests are rather aligned for us for win-win situations than opposing China in each of these sectors. Another example is chips, where we've seen that China has built its local chip manufacturing. It's not there yet where the US is, but we see now that there is a big part of the demands for chips coming from China, and they are becoming increasingly independently and have themselves also launched a couple of countermeasures, like restricting materials like gallium and so on. And I think some of these countries who have put sanctions, tariffs and so on onto these sectors like chips, EVs and so on, they're now starting to notice that if things are going downhill with their own economies, maybe we should rather think about win-win situations again than confronting China, for example. And I think that may unfold in the next couple of months and years, and maybe this Fed cut is kind of a symptom for the German economic minister talking about we don't want a trade war is a symptom of that. We're just at the very beginning of it. It's not there yet. Clearly, it's still very confrontational and so on. But I think that's still from the age of COVID, where people were not able to travel, people didn't talk. We have lots of conflicts around the BRICS versus the West and so on. And now we have possibly an election in the US which might be decisive towards the approach towards China, where Trump might be much more transactional and pragmatic. I think from what I've heard, Harris and team might be more in the Biden footsteps of talking authoritarianism versus democracy and that type of stuff. But we'll see, right? When the realities hit, like the economy and so on, we might see things change quite a bit. And I think the Fed cuts that are now coming might just unlock this. So these are just a couple of things I can talk about freely here on the playground without having my keyboard and the facts ready, but things that I've been noticing for quite a while, and I try to summarize them quickly. I hope it provides value. If so, please smash a like and follow me if you don't follow our channel yet. And thanks for watching, and see you in my future videos.